YouTube. So I'm gonna copy the link. I will copy the link on YouTube right now, and then I will forward the link to traders on Telegram, so you guys can get access through the link on Telegram, right? So we are currently live right now on YouTube. So let's copy the link before we start the live stream. Okay, I pasted the link right now so you guys can watch from YouTube. You can now watch from YouTube. So just click on the link. Once you click on the link, you will be redirected to view this live stream. So today we are going to talk about how to use the Fibonacci retracement tool, right? So the Fibonacci retracement tool, it's a very powerful tool in technical analysis, right? It's a very powerful tool in technical analysis. So in this tutorial, I will show you how you can use the tool to run analysis in the market. So if you're a beginner, this is going to be a life-changing tool for you, right? If you are a beginner in the market. So I will show you how you can use the Fibonacci retracement tool in the market, how you can use it in an uptrend and in a downtrend, right? So first, if you are new to the channel, make sure you follow my profile. If you are new to YouTube, if you are viewing us on YouTube for the first time, make sure you follow my YouTube page, right? And then if you are new to our TikTok profile, make sure you follow our TikTok profile, right? So let's talk about the Fibonacci retracement tool. So the Fibonacci retracement tool is one of the important tools in technical analysis that professional traders use to detect trade setup in the market, right? So if you learn how to properly use this tool, this will be a powerful tool in your arsenal tool, which you can use to perform wonders in the market, right? So the Fibonacci tools is made up of some figures, some numbers, right? So these numbers are very important. They play an important role in technical analysis of trading. So you need to know the important numbers of these tools, right? So in this tutorial, we will talk about the Fibonacci retracement tool. We go through its history. I will also show you how you can draw the Fibonacci retracement levels correctly and how to use the Fibonacci retracement tool. I will show you the step-by-step guide on how you can use them, right? So this is what we are gonna go through in this live stream today, right? So let me just wipe out this. Let me put this down right here, and let me put some rating words on our chart. So we're gonna do it about how to use Fibonacci retracement tool, right? Retracement tool. So this is what we're gonna talk about today in this live stream, how to use Fibonacci retracement tool, right? So we are gonna talk about how you can use them in the market. So first, To understand what the Fibonacci tool is all about, we need to know how it works. Right? First, we need to know the Fibonacci numbers, right? So these numbers comprises of some repetitions of some sequences in the market, right? So when you add some certain numbers together and you divide them, they give you a certain ratios in the market. So this is what the Fibonacci retracement numbers are all about. So for example, right here, if you are, let me use this tools right here. Let me use one of my pen right here. Let's get it done right here. So the Fibonacci retracement tool, I know most of you guys know what the Fibonacci retracement tool is all about. We have some levels in the market. Let me just first apply the tool right here. We are using trading view. So I have already set this tool right here on my platform. So I will try to implement all the levels right here on the chart. Okay, this is what we have right here. So this is the Fibonacci retracement tool on this board right here. So as you can see, we have different levels on this tool. We have the level of which is the extension. We have the 1.618. We have the 100 level. We have the 0.78, right? So first, let's use the ratio, the digit figure. There's something about you need to understand about the Fibonacci retracement tool. You can set it to be in percentage, right? You can set it to be in percentage, right? So, but I prefer to use the ratio digit, So you can use it, you can set it to be in percentage if you want it to be in percentage, right? But I prefer to use the digits, right? So to set this, you go on your trading platform. Right there on your trading platform, you're gonna have the options to set the levels as percent or values. As you can see right now, once I click on the percent under the tools on trading view, you can see this level right now will change to percentage. So if you want to set this percentage to digit, I prefer to use the digit. If you prefer to use the percentage, this is also good, but I prefer to use the digit. So what you need to do is to right click on the Fibonacci retracement tool once you draw it on your chart. If you are using the MetaTrader, you can as well do that. Once you right click, you move your cursor to the settings and select settings, and then you scroll all the way down on trading view, and then you come to the levels box right here. Make sure you check the levels and then switch from percentage to values. So once you do that, you click OK. Now you can see the levels in digits, right? So you can as well approximate this digit to 2 decimal places or 1 decimal places, right? So this is how you can use them. So you can see right here, this Fibonacci retracement level has a lot of figures, a lot of value levels, a lot of retracement levels, right? So we have some levels which are extensions. So this 1.618 is an extension, right? So in the latest study of this course on Fibonacci retracement tool, I will show you guys how you can use the extensions of the Fibonacci retracement tool, right? But let's focus on the retracement level for now, right? In the later course, I will show you how you can use the extension levels. So in this tutorial, we're going to focus on the retracement level, which start from 1 all the way to 0, right? So these are the retracement level right here. So we're going to focus on the retracement level, whereby from 1 all the way up, we have the extension, right? So there's a way you can use the extension in the market. We talk about this in our later study of this note too, right? So I don't want things to be too complex or complicated for you guys to understand right now. So I think we need to take it from the simple stage before we get to the advanced section, right? And then if you guys have questions, in relation to this topic, you can let me know, right? Okay, so that is what we have right here. So Once you apply this Fibonacci tool on your chart, you see the levels, which ranges from 0. As you progress upward, you see it ranges to 0.236. Once you progress upward, you see the 0.382. You also have the 0.5, which we call the 0.5 is what we call the benchmark. And we also have the 0.618 level. We also have the 0.786, and we have the 1 value scale, right? So these are these levels. So of all these levels right here on the retracement level, there are some levels which you have to ignore, and there are some levels which are very important in technical analysis. So you need to put into consideration these levels, right? So Fibonacci retracement ratio works on the sequences of number and are often used for technical analysis in trading, right? So many traders use them. Many traders use them, combine them with other trading strategy to form a reliable and an effective trading strategy, right? So the concept of this tool right here is to mark a certain levels in the market whereby the market has a potential to retrace this to, right? So whenever you see price is moving in a downtrend or in an uptrend, you know the market will not move in a straight line. So you don't expect the market to move in a straight line like this, right? The market will not move like this. So instead, the market will move in a wavy form, whereby making a swing high, swing low, swing high, swing low. So, and one of the best places you can buy in the market is at this retracement of swings. These are the levels you look out for long in a bull trend, right? So in a bull trend, these are the best zone to look out for a bull trend. At this level right here, these are the zones you look out for long entry. You look out for long entry at this zone in a bull trend, right? So one of the tools you can use to detect this pullback is the retracement tool. As you can see, this is an uptrend. I'm gonna get this off. So this is an uptrend, right? Good. And then in a downtrend, we have market carving a series of a low high swing, lower low, low high swing, lower low, low high swing, lower low, and low high and a lower low. So the best zones to go for a short entry is at the swings of the low high swings. Right here in a downtrend, you look out to short at this red marked or circled zone. So one of the tools you can use to detect a short entry in a downtrend is the retracement tool. As you all know, price will not go down in a straight line, right? So price must always have a pullback before the downtrend continues. So this is the concept of the Fibonacci retracement level. So that is all about Fibonacci retracement levels. Now, how can you use these levels to detect this retracement level? First, the man who invented this tool is called Leonardo Fibonacci. This tool was invented by Leonardo Fibonacci in the 12th century. So this man noticed there is a sequence of figures. So don't let us just go into that history. So not to just talk about relevant things. We just need to know how these levels are used. So I don't want the videos to be too long so that we don't get bored, right? So for now, after Leonardo invented these tools and technical analyst traders in the market, after they have back tested and used this tool right in the market, they discovered this tool was a very powerful tools that can be blended with other trading tools in the market to develop a powerful trading strategy. So right here, the levels you have to watch out for as a trader. Let's get off these trends right here. Some of the levels you have to watch out for right here as a trader. These are the levels of the 0. Let me just change the color of this pen right here. Okay, you have to look out for the price of the retracement level of the 0.382, 0.5, 0.618, and 0.78. So this level right here are so very powerful. And then I will show you how you can use this level to make entry, and then now you can use this level to set stop loss, because the Fibonacci retracement tools can be used in different ways. One, you can use it to look for potential trade entry zones, and you can as well use them to set stop losses in the market. All right, so As you can see, the idea of the Fibonacci retracement tool is based on figuring out potential resistance and support level which are hiding in the market. So the Fibonacci retracement tool will help you to look out for potential support and resistance level within a trend which are not visible, which are not obvious, which are hiding levels in the market. So this is where the Fibonacci retracement comes into play, right? So now let's get these drawings off right here. So first, let me show you how you can use the Fibonacci retracement tool to detect trade opportunities in a bull trend. You know, the market can exist in three directions, right? We have three directional formations of market trend. We have the uptrend. No, let me just let me use my other pen so that we don't have this chart to. Okay, so the market can exist in three directional swings. We have the uptrend market. Here is an uptrend market, right? And we have the ranging band market. This is a ranging medium market. You can see that. And we have a downtrend market. You can see that. So these are a three directional flow of price in the market. So at this medium right here, we have an uptrend market. The market keeps on going in an upward direction. You can see the direction. The market keeps going in an upward direction. And at this medium right here, the market keeps on bouncing within the range. It bounces up and down. You can see that. And the third section right here, the market goes in a downward direction. So this is what we call a bearish trend. For those of you who do not know what a bearish trend is all about, right? So this is a downtrend. This is a ranging medium. This is an uptrend, right? So we have an uptrend right here. One right here is an uptrend, and the second right here is a ranging medium, and then the third right here is a bearish trend. So here is a bull trend, bull, right? We have this as a bull right here, and the right here, neither the bulls or the bears are dominating in this rally, so we call it a range medium, right? This is a range medium right here, and the right here we have it as a bear trend. So the question now is, how can you use the Fibonacci retracement tool in these three types of trend available in technical analysis? So the answer right here is, the Fibonacci retracement tool can be used in a bull trend and in a downtrend, right? But cannot be used in a ranging medium. So you cannot use the Fibonacci retracement in a ranging medium, which means Fibonacci retracement works with trending markets. So you cannot use the Fibonacci retracement in a ranging medium, right? But there's a way you can use it in a ranging medium. So if you have a ranging medium on the higher time frame, you know, on the lower time frame, a ranging medium is going to be a bigger trend. So we talk about that in the later course of this study, right? So for now, let's just focus on the basic aspect of using the Fibonacci retracement tool for beginners in the market. So guys, if you have a question, you can ask your question through the comment section on YouTube and then on the TikTok, right? So you can ask your question. So now let's get into details how we can use the Fibonacci retracement tool. First, before we're gonna get into using the Fibonacci retracement tool, let me put down the levels you guys need to look out for trade opportunities, right? So I told you guys we have if you are using the value scale, we have the 0.382, right? This level is important if the market is in a strong bull trend. If the market is in a strong momentum trend, right? So if the market is in a strong momentum trend, right? So the 0.382 is useful when the market is in a strong momentum rally, right? So, and next we have the 0.5%. We call this level the benchmark, right? We call this level right there the benchmark. So this is like the average value, the average scale. So this is the half of the tool. So this is why we call it the benchmark. That is the half, right? So this works in a normal trend. So you use this in a normal trend, right? In a normal trend, right? So this is how you use the 0.5, whereby the 0.38 is good in a fast trend. When I say a strong momentum, I mean a fast trend. When a trend is too fast, this is what we call a fast trend, strong momentum, fast trend, right? So this is where you use the 0.382, and I think that is what is actually going on GBP/USD. So I will show you examples of levels where you can use the 0.382, right? And the next level is what we call the golden number, right? This is the golden ratio. So it is the 0.618, right? So this is the golden ratio number. This is the G ratio, right? So this is used under right here when the when the market is flowing and not too fast, but not in a normal direction. That means the market is just flowing freely without any strong momentum, right? So you use the golden retracement figure of the retracement or two right here. So this is the golden ratio, right? And we have the 0.786, right? So right here you use this level most of the time to set your stop loss, right? You use this level to set your stop loss. And don't forget, traders, we also have the 0.236. You can as well use this level to set your stop loss, right? But let's focus on this 1, 2, 3, right? Let's focus on this, and later we talk about the 0.86, how you can use that to set your stop loss. So guys, if you have a question, you can use this opportunity, this medium right now, to ask your question before we proceed to the next section, right? If you have any question right now, you can use this opportunity to ask your question before we proceed to the next section, right? Do you guys have any question? So the 0.382 is for strong momentum, the 0.5 is for normal trend, and the 0.618 is for weak trend. When the trend is weak, not strong, not under a normal condition, but it's weak trend, right? Hope you got that. So let me just use a black pen right here to demarcate right here so that you don't miss up things. Good. So guys, you can see that right now. Right? So let's just clean up this right here so that you guys can get the idea we have right here. Okay, good. Now you can see that. So this is how you use the Fibonacci retracement levels on the price chart, right? So you use the 0.6, you use the 0.382 when the strong is strong, that is fast moving trend. You use the 0.5 when the trend is normal, and you use the 0.618 when the trend is weak, right? So you guys can ask your question. Someone said, is this live? I don't understand you. Someone said, is it important for us to wait for the price to touch this listed point? The market, I guess not, because I have a lot of questions. So you can ask your questions. I will try to give answers to as much I can, right? So these are the levels you look out for in the market. Now let's see how we can use these levels in an uptrend and then in a downtrend. So first, let's move our chart to fit. So in an uptrend, okay, let's try to see this first. So in an uptrend, when you have price moving in an uptrend, this is an uptrend. No, I'm gonna use something else right here. Okay, let's clean this off. So in an uptrend, this is what you have in an uptrend. In an uptrend, the market keeps moving up and down, up and down, up, down. So at this level right here, these are the zones you look out for long opportunity when the market makes a pullback. So how can you know the market is going to make a rejection to the upside at this level structures right there? So these are the questions. So this is where your Fibonacci retracement tools comes in, right? Now let's see how we can apply the Fibonacci retracement tool in an uptrend market, right? So to use the Fibonacci retracement tool, you have to apply your Fibonacci retracement from swings of lows to highs in an uptrend, right? You have to apply your Fibonacci retracement tool from swings of lows to highs in the market. That means, for example, based on what we have right here, if you want to use this Fibonacci retracement tool, you have to apply it from the swing low right here to the high structure right here. This is how you use the Fibonacci retracement tool. But so first, let's remove some of these levels right there. Let's remove the structures we do not actually need on this Fibonacci retracement tool so that we can easily understand it as a beginner trader. So I'm going to remove the 0.236 and okay, the extension is good. Okay, they are good right now. Okay, so this is what I mean as swings in the market. So let's get this off right here. When I say swings in the market, in an uptrend, you have swings starting from a low and then it's rallied to a certain high. So when price starts falling back, this is when you apply your Fibonacci retracement tool. You apply it from the swing low to the swing high. You can see that? So this is how you apply your Fibonacci. You apply it from a swing low to the swing high, which means if you are going in an uptrend direction, your Fibonacci retracement tool has to start from the retracement level of 1 and it has to end at the retracement level of 0. That means from 1 to 0, right? So this is how you apply your Fibonacci in an uptrend. So now the next thing you have to start looking out for is how market is going to react to these level structures in the market. How will market react to these levels in the market? So when price move from this swing low to this high, right? Now the next thing you have to do as a trader is you have to start looking out to see how price reacts to this level. Price could react to the 0.382. That is if the market is under the influence of a fast moving trend. Price could react to the 0.5 if the price is under a normal moving trend. Why price could react under the 0.68 if the market is under a weak trend. So the 0.382 means fast trend, while the 0.5 means normal trend, while the 0.618 means a weak trend. So know the differences between these levels, right? So this is how you use the Fibonacci retracement in an uptrend. The same goes to a downtrend. Do not worry, guys. I will show you how you can use this in on a real life chart, right? So I'm just trying to see how we can use it in a direction of the market. So in a downtrend, the market moves from the swing high all the way to a swing low, right? So to apply your Fibonacci retracement tool, this is what you need to do. Once you click on your Fibonacci retracement tool, you start from the swing high all the way to the down. You see that? So it means the market is moving in a downtrend. So your one retracement level has to start from the starting point of the trend, which is at the top, 1, and then end at the 0 because the market is going in a downtrend. Now the next thing you have to start looking out for is how price is going to react to these levels in the market. How is price going to react to the 0.38, 0.5, and the 0.618? So in a fast moving downtrend, market will find rejection at the 0.382. In a normal bearish trend, price will find rejection at the 0.5. And in a weak bearish trend, price could find rejection at the 0.618. Right? So it all depends on what you can see on the price movement to from this low high swing or to the lower low swing right there. So this is based on momentum analysis, size of candlesticks, the speed of price before price move from this low high swing to this downside or to this lower low. So this determines how price would react to these levels in the downtrend whenever there's a retracement or a pullback against the dominant downtrend. Right? So now let's go on a real life chart, since you know how to construct your Fibonacci retracement tool right now. So let's go to the real life chart and see how we can apply it. And then once again, before we go on the live trend, you see in an uptrend, you start your Fibonacci from the low to the high, while in a downtrend, you start your Fibonacci from the low high swing to the lower low swing. So guys, make sure you understand that. In a bull trend, you start from the higher low. You start from the higher low swings, higher low to a higher high. That is in a bull trend. Let's get this off. That is in a bull trend. Take note of that, right? Because this is where most traders get it wrong when using the Fibonacci retracement tool. Why from the bearish trend, you start from the low high swing to a lower low. So this is a bearish trend, bearish trend. This is a bearish trend, and this is a bull trend, right? So know the difference between this and the bear trend. In the bull trend, you start from the higher low to the higher high, and in a downtrend, you start from the low high to the lower low, right? Now let's get this off our chart and let's move to the next section on how you can properly apply this on your chart. So right now, let's start in a bull trend. So to use this on a bull trend, we have to look out for a rising trend. So for example, right here in this market, here is a rising trend. Here is a rising trend right here. You can see from the swing low right here to the swing high right here, this is a bull trend, right? So how can we use the Fibonacci retracement tool in this market? So what we need to do as a trader is apply our Fibonacci retracement tool from the swing low right here to the high swing right here. You can see how the 0.382 acted as support for price. So the key idea of the retracement of the Fibonacci retracement tool is to serve as a potential sub or key level structures in the market. So these are hiding levels in the market. So there are other factors you have to combine with this level before you can make a decision that yes, these levels are good to go, right? In the later study of this course, we go into more details. What are the things you have to combine with this level? So in this live stream, we just want to talk about how you can apply the Fibonacci retracement tool based on swing, right? So this is done right here. And as well, you can see from these swings right here in the market, the uptrend continues to this structure. When price starts retracing down, we can apply this Fibonacci retracement tool right from the swing higher low right here to the higher high right here. You can see how the 0.38 keeps on rejecting price to the uptrend in this market. So this is how you use the Fibonacci retracement tool in the market. Right now, let's check the downtrend right here. So in the downtrend right here, this is not a this downtrend right there doesn't give us a nice or retracement level. So let's look out for a market that gives us, okay, this is an example of a well trending market. Because sometimes whenever the market is moving in a steepy movement, it's so difficult for you to use the Fibonacci retracement tool. A steepy move means a market that moves in a fast trend without a constant pullback, right? So this is an example of a downtrend right there. You can see how the market keeps on carving a series of a lower low, low high, lower low, low high, and it keeps moving all the way down. So one of the tools you can use in this market is the Fibonacci retracement tool. So in this downtrend right here, you can see we have a series of a swing low, low, and lower high. So in this type of market, you can use the Fibonacci retracement tool, right? So for example, if you want to use the Fibonacci retracement tool, maybe from the swing right here to the swing low right here, you're from the swing right here, let's use it from the swing right here to the swing right here to get the pullback of price at this medium. Then you have to construct your Fibonacci retracement tool from the low high swing right here to the lower low swing right here. You can see at this level right here, the 0.5 acted as a resistance for price. So this is how you use the Fibonacci retracement tool from swing to swings in the market, depending on direction of the market, right? So in the later study of this course, we dive in more into how you can use the Fibonacci retracement tool, right, in combination with other technical factors in the market. So right now it is questions and it is question time. It is question time. So if you have your question in relation to this topic, you can ask your questions, right? Ask your questions. Ask questions, right? Ask question. It is question time. You guys can submit your questions. I think we have a disconnection right now on TikTok, but we are still live on YouTube. We are still live on YouTube. So I said, what does it mean if it is 0.5 retracement on the Fibo? If it is 0.5, okay, Peter Kingsley from YouTube asked a question. He said, what does it mean if it is 0.5 on the Fibo? If it is 0.5, then it means the price has retraces to half of its swings. So if the market moves from this level to this high, and the Fibonacci retracement tool tells us that from this swing right here, I think we have a, from this swing right here, we are having difficulties with network connections right here. From this swing to this high, I think we are having a lot of errors in like my tools is not showing on the chart. We are having a lot of connection issues. So I'll try to refresh the network right here. You can see right now. Let's try to I'll try to refresh my network and see if there's anything I can. Is there anything we can do to solve this issue right here? So guys, I'm having a serious network issue right here. I think we need to postpone this live stream to another day. So I think we need to postpone the live stream to another day. So Peter Kingsley, can you hear me right there on YouTube? Are you still right there? Can you see my screen right now? So I need a response from Peter Kingsley. If you can see the screen, if you are right here. Right. So you guys let me know if you are back right here, if you can see the screen. Okay, thank you. Thank you, Kingsley. So when Kingsley asked a question which says, what does it mean if it is a 0.5 on the Fibonacci retracement level? So let's say, for instance, the price is moving in an upward direction. That is, the market is moving in an upward direction from the swing low right here to the swing high right here. That means the market moves in an upward direction, right? And the Fibonacci retracement to from this level to this high, as price keeps moving from this higher high, price go to the 0.5. It technically means price has made the retracement of the half movement from point A to point B. Let's get this off right here. To point B. It means the distance covered from point A to point B, the half of this distance is at this medium, which is at the 0.5. So that is the meaning of the 0.5. It means price has retraces half of its initial movement. Right, Kingsley? So which means if price to move from point A to point B like 100 pips, and the price make a retracement to 0.5, then it means price is currently trading at the 50 pips level, right? So that is the movement, that is the meaning of the 0.5, right, Kingsley? And if price should move to the 0.618, it means price has retraces almost 60% or 61% of the initial move from point A to point B, which means price has retraces almost to 40 pips, right? So this is the meaning of this price movement, right? So that is the meaning of the 0.5 on the Fibonacci retracement level. So guys, seems we are going to put an end to this live stream since we are having difficulties to connect. So guys, a backup of this live stream will be available on YouTube, so you can go right here and watch the live stream. If you miss the live stream, if you have a network disconnection from your hand, right? Thank you guys.